Hello, everyone, and this fine afternoon, we got some crypto news for you. That's right, other ETF funds are beginning to seed their ETF, so we're getting more and more clues that the ETF will definitely be approved. In fact, VanEck, one of the other ETF applicants, has seeded their fund with $72.5 million. Remember, BlackRock last Friday only seeded with $10 million. VanEck's one-upping them and seeding with $72.5 million. And I don't think these are the only ones that are going to seed within the next few days. That could be part of the reason that Bitcoin actually did go up today. The ETF excitement is reaching a feverish pitch, and people, I think, are getting close to 100% sure that it will be approved on Wednesday. Of course, BlackRock itself has given a lot of credibility to that because they expect to be approved by Wednesday as well. Remember, there's 16 funds that applied, and I think almost every one of them will actually need to seed or buy a bunch of Bitcoin very, very soon. A lot of these are publicly traded equities. So if they actually bought in the past, which I doubt they have, they would actually have to show it on their balance. So BlackRock obviously seeded with $10 million. They expectedly have $2 billion to come in as soon as the ETF is approved. VanEck, $72.5 million. You can bet that Fidelity, ARK 21, Franklin Templeton, and others are going to buy very, very soon. I think this is just the tip of the iceberg. And this is one reason why I don't think crypto will automatically dip right after the ETF announcement, because these big funds are going to be buying whether off OTC or off the actual exchange. And I think they're going to be buying a whole lot. So I think the expectation of a big dip definitely could be disappointing for many of those that have taken a short, and we could actually end up going up, which would wreck a lot of the shorts, which I would be gleeful in seeing people getting their shorts wrecked because they shouldn't have taken shorts in the first place. On other news, the Bitcoin ETF fee wars have begun. You know that a lot of these ETFs are going to be approved at once. There's only so much money in the pot, although there's going to be a great amount of money in the pot, and there's going to be a lot of demand. Let's not get that wrong. There is going to be a lot of demand. No question about that. And because there's going to be a lot of demand, these funds are fighting over customers. And how do they attract those customers? They charge less and less fees. We began at above 0.5% fee, but now Bitwise has lowered it to like 0.29 or something like that. And of course, some of them are going to be like free fees for 6 months and the first $1 billion they get. So, based on that, we can be fairly sure that these Bitcoin ETFs, they're almost going to be 100% profit for people that actually buy them, because of the competition for customers. They're not really going to want to charge high fees, so their competition can get basically a leg up on them. BlackRock being the biggest one, they might not offer like the lowest fees because they're basically hoping that their trust in the BlackRock Corporation or the cabal will actually get people to invest in the first place. Like the difference between 0.5 and 0.2 honestly is not that much, but if you're investing a lot in these ETFs, it could amount to millions of dollars. Percentage-wise, very little, but absolute-wise, obviously it can be a lot if you're investing a lot of money in these Bitcoin ETFs. So that's another clue that the ETF's about to be approved. These guys are already putting their values up there for people to actually get ready of which ones they actually want to buy. And they're trying to position themselves to look more and more delicious to prospective buyers. Because remember, a lot of these prospective buyers might actually be large funds, and saving a lot of money would actually be really nice for their clients. So, expect the fees to go down even further, and expect there to be very, very tight competition between the big issuers or the big ETF issuers of like what fees they'll charge, and you could pick it up pretty much for no fees at all. Speaking of such, The spot Bitcoin ETF is trading at an 8% premium right now. Remember that Grayscale GBTC that was trading at a 60% discount? Well, now the ETFs are going to trade at an 8% premium because people still view the ETFs as safer than the original coin. There's also for larger funds and for portfolios and stuff and for retirement funds, I think there's like a deferred tax option if you buy the ETF. So that could actually have a lot of attraction as well. But going from like a 55% discount to an 8% premium, that is some sweet, sweet gains for the GBTC buyers. Should have bought some GBTC before the end of last year. Would have gotten a lot of huge gains. Obviously, should have bought some Coinbase and other stuff as well. But yeah, the GBTC stuff, definitely something actually to take a good look at. I don't think it's worth buying now because most of the discount's pretty much gone, and now you're going to be switching to a premium. I think like ARK Invest and others are selling their GBTC and Coinbase shares just to rebalance their portfolio, but also because they're in competition with GBTC for Bitcoin ETF customers, and they'd probably rather buy their own fund anyways. So now we're going to go from discount to a premium, and that's another sign the bull market is coming very, very soon. So there's an interesting theory about the person that sent $1.2 million to the Genesis Satoshi wallet, why he did that. And it's because he wanted to out Satoshi due to taxes. We know that Bitcoin did start in San Francisco, not in Australia where Craig Wright was at the time. And but we don't exactly know who it is. Now, the Satoshi wallet, obviously, if it belongs to a person, is just another American citizen that made money in the United States, most likely. And if he gets $1.2 million in a Bitcoin gift, that is far above the gifting limit for a year. I think the gifting limit's $13K. And he would actually have to pay taxes on the $1.2 million. So he's hoping to oust him that way. But I think that is a dumb thing to actually do because the likelihood that Satoshi is dead. Obviously, this guy may have never heard of Hal Finney. And if the Satoshi wallet never actually sells, there's almost no way for the IRS to go after them because going after a dead guy isn't going to help. And if no one actually has any access to the wallet, they obviously aren't going to pay any taxes. So the guy probably just threw $1.2 million in the dumpster. Now, I don't think this will get Adam Back or Nick Szabo to come out and say, hey, we're actually part of Satoshi, because Back is already pretty well off, and I think Szabo is as well too. And if it is indeed Hal that has the original wallet keys, they really can't do anything anyways, because you can't really tax a dead guy. You can tax his estate, but since he has the keys and his estate can't actually access his holdings, very, very hard to tax his estate. And I don't think Hal actually willed his Bitcoin off to anyone because it wasn't worth very much at the time. And like I said, if he died with the keys and he's hoping that someone will uncryogenically freeze him in the future, no one probably knows where they are. A little bit crazy to think about and a very, very bad strategy to get Satoshi to oust himself. But hey, maybe people have tried it. Maybe some really rich person really wants to know who he is, so he was willing to take a $1.2 million bet that obviously fell through. Right now might be one of the best times to buy Coinbase stock because Coinbase wants to offer derivatives in Europe. And we know that derivatives are a cash cow because people get wrecked in derivatives and then, Coinbase profits. So they want to purchase a Cyprus-based company to offer cryptocurrency-linked derivatives in the European Union. Obviously, legitimately, not illegitimately. So they have an agreement with an unidentified customers, which would give it to an MIFID Markets and Financial Instruments Directive license. MIFID refers to the European Union EU's licensing regime for investing, services, and activities. The license would help expand access to our derivative products by allowing Coinbase to offer them to eligible European customers in select countries across the EU. So obviously, this is a big expansion of Coinbase news. More places where they can actually collect fees, more profits for Coinbase, and you can bet that in a bull market, people are going to be lining up out the door for these derivatives. Why? Because people are insane and they have to have leverage and derivatives in crypto, even though it wrecks 90% of all people who actually play it. So obviously, Coinbase has a long road before it finalizes the acquisition. There's a lot of regulatory hurdles to actually get past, but overall, Coinbase is actually expected to expand a lot in the next year. So Coinbase definitely one thing you want to look after, and maybe the Coinbase stock, something that you want to add to your portfolio before they really kick off their expansion in a bull year. Even without the expansion, I think Coinbase will do extremely well. But with the expansion, really the sky's the limit for a company like CB. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.